In Chapter 18, Problem 18-38, Whitefish Machine Shop is a manufacturer of motorized carts for vacation resorts. Patrick Holland, the plant manager of Whitefish, obtains the following information for job number 10 in August 2014. A total of 23 units were started and 3 spoil units were detected and rejected at final inspection, yielding 20 good units. The spoil units were considered to be normal spoilage. Costs assigned prior to the inspection point are $1,000 per unit. Assume that job number 10 of Whitefish Machine Shop generates normal scraps with a total sale value of $750. It is assumed that the scraps returning to the storeroom is sold quickly. Requirements. Prepare the journal entries for recognition of scraps, assuming the following. A. The value of scrap is immaterial and scrap is recognized at the time of sale. B. The value of scrap is material, is related to a specific job, and is recognized at the time of sales. C. The value of scrap is material, is related to a specific job, and is recognized at the time of sale. D. The value of scrap is material, and scrap is recognized as inventory at the time of production and is recorded at its net realizable value. A. The value of scrap is immaterial and scrap is recognized at the time of sale. You would do the journal entry by debiting cash or accounts receivable for $750. Credit scrap revenue for $750. Record the physical quantity of scraps returned to the storeroom and to regard the revenue from the sales of scrap as a separate line item in the income statement. B. The value of scrap is immaterial, is related to a specific job, and is recognized at the time of sale. Journal entry will be debit cash or accounts receivable for $750, credit work in process control job number 10 for $750. Unlike spoilage and rework, there is no cost assigned to the scraps, so no distinction is made between normal and abnormal scraps. All scraps revenue, whatever the amount, are credited to the specific job. C. The value of scrap is material, is related to a specific job, and is recognized at the time of sale. Journal entry. Debit cash or accounts receivable for $750. Credit manufacturing overhead control account for $750. Because the scrap is not linked with any particular job or product, all products bear its costs without any credit for scraps revenue, except in an indirect manner. D. The value of scrap is material, and scrap is recognized as inventory at the time of production and is recorded at its net realizable value. You will record the journal entry to debit materials account, materials control for $750, credit work in process control job number 10 for $750. In this illustration, assume that the scraps returning to the storeroom is sold quickly, so it is not assigned an inventory cost figure. This wraps up the video for Chapter 18, Problem 18-38.